The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we're coming back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. Don't forget you can listen to us anywhere online at TFNN.mobi. Let's check where the markets are at right now. We got the S&P is up 14.5, with the Nasdaq up 58. The Russell's up 10. Dow's currently up 68 points on the day. Gold's down 6 points right now. Silver down about 0.5%. Copper down about 30% on the day. We got oil running on up 88 cents right now, almost a 1% move there. Natural gas up 2% on the day. We got corn just down a few bucks. We got soybeans moving pretty good, up 16 points right now. Euro dollar's currently up 11. Pound dollar's currently up 60 pips. Aussie dollar getting hit pretty hard, down 82 pips right now. Euro yen up $1.49. Dollar yen up 96 cents. Pound yen up $2.17. Big move there on the pound. We got the dollar CAD is up 76 pips on the day. And we have the dollar franc currently up 27 pips on the day. So that gives us our current market wrap on where everything is. Let's talk about the outlook for the week, what's going on, and what you might be able to do to take advantage of it, or at least at the minimum be aware of it. So this week, of course, we had earnings this morning, came out. JP Morgan posted a nice profit despite all the other things that it went on. But they had theirs come out, and that release comes out at 7:10 in the morning. The other two major earnings, there's a lot of earnings releases, of course, but the other two major earnings releases, and when I say major, I mean more like large components of the Dow and the Nasdaq, because they only have 30 stocks or 100 stocks in them. On Thursday at 4:15, we're going to have Intel, which is actually both in the Dow and the Nasdaq. And now, the press conference may be later than 4:15, so the time I'm quoting you is the wire release. So when they usually release their wire of their earnings. And that comes out right at the end of the day. And it's really important to be aware of that, because sometimes that can have some unknown, weird volatility happening right there at the end of the day. So be careful, especially like on expiration premium collection trades, or trades you're holding right there to the last minute. That you should expect the indices, all of them really, but especially the Dow and the Nasdaq, to have more of a potential impact right there at the end of the day. And again, that's 4:15 on Thursday. And then over on Friday morning, we're going to have GE, part of the Dow, going to be coming on out at 6:30 a.m. Okay, so those are your major earnings releases for the week. And let's check out what other news, trades, etc. are coming on out. We had the pound dollar got released. This morning there was a trade on it, and also we had another one. So we'll review both of those on the pound dollar trade there, and on the other trade we had, which was euro dollar, I believe, euro dollar on the U.S. retail sales. Tomorrow we're going to have Aussie employment change in the evening, so we'll talk about that one, get you ready for it. And we'll also go into the U.S. core CPI, pretty big release, and we'll cover two different kinds of ways to trade the British retail sales on Friday. One of those being a straddle strangle on one pair, but another one being a butterfly on one of the newer pairs that have been added to Nadex, and doing that on the euro pound. Okay, so we have all those pieces together. Now let's pull up the charts. Let's look at each one, and let's figure out exactly what piece that we want to do, and how we could have taken advantage, like I said, of the different moves that happened on the markets. If I go in and I look at this chart, so let me pull up the pound dollar for you. It takes just a second here. I want to get both of them up. And let me see, I'll get the chart over here, and then I'll get it updated for you. So that'll go right in, be updated. And auto render over here in just a second. There we go. All right, so we got futures live, getting forex live, and we'll look at the trade. So first, let me do a review on the trade. What was the trade? It was the UK released their CPI number. Okay, And yeah, look at that. Run down 2 deviations and run back up. Almost 2 deviations right there. And we got a spike right there, right near the 2 deviation level. So definitely a warning to, be cautious, maybe back off, tighten some stops, maybe even look for a reversal trade at this point, or do a premium collection reversal trade on the NASDAQ. But focus being the pound dollar at the moment. The release came out at 4:28 in the morning, so you could have used 5 a.m., 6 a.m., 7 a.m. I mean, you could even have used 11 a.m., 3 p.m., 7 p.m., 11 p.m. Binaries, but usually you want closer because they get more expensive. And there's also 5 other pound announcements at the exact same time that can of course add to the volatility of the move. So let's look and see what kind of volatility did we get. And what kind of volatility did we expect? The pound dollar is usually the better one out of pound dollar, pound yen. We'll look at the two and see how they came out. But 70% of the time we get at least a 50 pip move. And out of all the moves, now some moves are going to be 70 pips, 80 pips, 100 pips, 120 pips. Obviously, if only 70% move 50, some are going to be 40, 30, 20. So but the majority of them move at least 50 pips. And let me load up my normal template over here. There we go. And what we'll do is we'll compare them, and we'll see, what was the average range on this move. So right here we go in, and we're going to back up to 430, and grab handy little ruler here. Go right up, and then so the high to the low 2 hours after the announcement. And we basically got that in about 10 minutes. Was 53 pips. So we hit our average of the 70 pips. We now are at 70% of the time where it moves 50 pips. So this will continue to keep that stat solid. Obviously, it could over a period of a number, because we're looking at years. Over a period of a number of announcements, that of course would lower down the average range. But we did get a 50 pip move. There's also something else to be aware of. Okay. And what I want you to be aware of on this is let's look at what would a 70 pip move be. I talked about this yesterday. Okay, one, we're measuring high to low. We're not just measuring announcement to low or announcement to high. So we got that little pop-up right as the announcement came out. But one of the things I mentioned is, hey, if there's a deviation level, and settlement counts, okay? If there's a deviation level and it's just beyond the deviation level, okay? And I mean, that's still a pretty decent amount, but I mean, it's about 10 ticks on the other side for that full 70 pip move, that if we need a 1-to-1 and it's on this other side of deviation level, we're probably going to want to take it before the deviation level. And you saw it come down, come back up, come down, come back up, come down. I mean, we literally had like 20 minutes, okay, where it was sitting right there at 63.96, just 5 ticks above, 4 to 5 ticks above the deviation level. That would be a clue that it is time to bell. Okay, so if you're not already at 1-to-1, depending on what price you got filled at on the trade, then it's time to go ahead and go, I think I want to get out of this trade. And part of what we look at is just what was the expectation and what was the release. Well, the expectation was 2.1. The release was 2.0. That's not, that's worse than the expectation, but it's not massive. Okay? I'd be looking for basically a difference of about 0.3 to get like that full 70 or more pip move. So I expect to get the 50 pip move, but probably want about a 0.3 divergence, which means I want it to be like a 2.4 or 1.8. And so since the announcement expectation was 2.1, it came in at 2.0. I'm probably not expecting that full 70 pip plus move to come on out. And add the deviation level to that. Okay, so that comes out, 5 minutes goes by, market's flying. Right there, first couple minutes, it just oscillates real quick for about 2 minutes. And then I see, oh, wow, that number came in lower than expected, but not that much lower. Market does drop, which is what you'd expect it to go down. But also it's coming right out of deviation level, and now it just hesitates and spends 20 minutes there. You had plenty of warning. This is not your trade. Get out. Now, maybe you got in for like a $20 risk and you took profit. If you did, awesome. But, let's say you got in for a $30 or $40 risk. You can get out of this trade now at break even, whatever. Maybe even make a little money on the trade. Depending on how it comes out, if you did spreads or binaries, where your contracts were. All the math I went through yesterday on how to put those pieces together. But I just want you to learn just these little things, like right here where, announcement was not quite greater than expected, hit deviation level, and even if it did move our full amount, it'd be, just beyond, like 10 ticks beyond the deviation. We're about 5 to 6 ticks above the deviation. Let's just take our profit 20 minutes there. There's no reason to hold on. So I really want this thing to keep going. And if I am going to be patient, then I want to see a big divergence. In other words, I want to see it be at 1.8 or 1.7. Because if I don't see a big divergence, I don't really have a big reason to think that it's just going to keep going and going and going. Okay? So that was our pound dollar announcement that came on out. And what we can also look at over here is the euro dollar announcement on this. And so that was for the trade from this morning. And on the euro dollar, we have the U.S. core retail sales. Euro dollar usually has the highest 80% of the time it moves 50 pips, and but the average is only 60. Okay, so when it breaks 50, it usually doesn't break it by a whole lot. So we go over, let's look at that, and let's see what kind of move we got, and if it was even a tradable trade, like a good trade. And so we'll cover that one when we get right back after this break. Stay right there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we were looking at, when we last left off there, just checking out the euro dollar, the moves that took place, what all we're looking for on it. And so looking at this, what I can see is the announcement came out. Let me back up over here. Right here in the morning at 8:30. We really didn't get much of anything off of it. Okay, we go right here, and this is right before the announcement. We moved down about 17 pips. We got a volume spike trade saying, hey, the market may go the other way, and we got that. Let's see how far did it go the other way. So what was our whole high to low? Well, high to low if you chose 9 a.m. was only 23 pips. High to low, if you chose, I guess we could say 11 a.m. or later, you got 33 pips. So really just not a big trade. That trade probably didn't work out that well for you. But there were 2 trades you could have done on this. You could have the euro dollar, which usually does have a high breakout. So this is one of those ones that goes into the not 80 percentile of moving 50 pips or more. But on the US yen, it barely moves 50 pips. Okay? Now, it's sort of an interesting stat. The U.S. yen, only 17% of the time it moves 50 pips on this report. But the average move is 45. So how is that possible? How does it only move, it's just, well, one, it makes sense. If the average move is only 45, it's going to be less than 50. But also it shows you there's not that many that are greater than 50. And so you can go over and you can look at the U.S. yen, and let's just check it out. And you could have done, say, a straddle or a strangle on here. And then possibly done like an iron butterfly. So I could call that a strangled butterfly or straddle butterfly. And if we go over and look at the U.S. yen, and I was just trying to look at what is every possible move it made. Well, it moved 25 pips high to low, and you would have chose 9, maybe 9, 10, maybe 11. Okay, if you chose any of those, you would have stayed within less than 28 pips. Now, if you chose 3 o'clock, which you really want to do a butterfly on a 3 o'clock unless you had the stats to back that up. Now, that one, it moved 48 pips. So we actually got a bigger move on dollar yen today as a whole than we done euro dollar. But here in the news, it was still much flatter. So if you would have, say, like a 9 a.m. iron butterfly, it only had 6 ticks. Okay, it's a very, very small move. 9 ticks from before to expiration. If you chose the 10 o'clock, you had 12 ticks. If you chose the 11 a.m. iron butterfly, there was only 7 ticks. So it was one that you could have went in and done an iron butterfly on, and it would have profited, and therefore it could have actually helped cover, a partial loss that you took over on the euro dollar. You shouldn't have taken, if you did a straddle, you shouldn't have had a total loss, but you probably would have lost it like on one side of the trade. And so if you brought in, say, $30, and let's say you lost 20 on the euro dollar, then you still netted out a $10 profit by putting all the different pieces together. Okay, so that wraps up that news. Let's see what other news that we have coming up. That's sort of the past news. Let's talk about the upcoming news. Plans that we need to be ready for. And we got weekly oil inventories coming out tomorrow. But the other trade that you could be looking at would be the Aussie employment change. So on the Aussie employment change, that's going to be released at 7:30. Okay, so 7:30 is when we're looking for our Aussie employment change report. And we are expecting, on average, 75% of the moves move 50 pips. But, Okay, let me put this but in there. But the average range high to low is 50. Okay, so most of them are doing like 51, 55, 57. But there are a lot that like maybe 10, 20, 30 that are bringing that average down. It's balancing out right at 50. So you could literally say like 75% are at 75 pips and, 25% are at 20 pips or 10 pips, whatever that number would have to come out to. So just understand, you're playing the numbers. And what you want to do when you're doing these news trades, don't go, okay, well, my news trades are working or my news trades aren't working. It's not your news trades. It's that specific news trade. Okay? So every time I do the Aussie dollar employment change report, how many are are profitable? How many aren't being profitable? So don't measure Aussie dollar employment change to pound CPI to U.S. retail sales to NFP on every currency pair. So I know that's your whole your whole system strategy, but you need to look at each report because some reports you may find are doing really well for you, some aren't, and you want to make sure you play the averages. So that way you don't have like one bad week and roll out everything, or one good week and go all in. Okay, so one good week, it's no matter what, it's just one trade per announcement, and you want to get those averages built up over time and see over 4 trades, over 10 trades. If it was 75% broke, it die at least break even or make profit. So make sure you're keeping those stats not only on your news trades, but of the individual trade itself and separating that out so you're not comparing apples to oranges. All right, there. We'll be back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Along, see what all we can find, and what we can do for the week. So, we talked about the Aussie dollar employment change report coming out tomorrow night at 7:30. What do we got on Thursday? On Thursday, we have the U.S. core CPI. And we got euro dollar, very similar numbers, but euro dollar coming out 80%, moving 60 pips. So may look at a dollar yen butterfly again on that one as well, just like the retail sells this morning. Okay, and let's see. I already talked about the earnings release coming out on Thursday at 4:15. We got Intel being released right there at the end of the day. We're also got the natural gas inventory report. Unemployment claims does come out in the morning there, but understand it usually doesn't have just a massive impact on the market unless it's just really off. Okay, looking on over at Friday. On Friday, what we got going on over here is we have the British pound retail sales, and they're coming out at 4:30, and they usually have some pretty nice moves. So we're usually looking for about a 70 pip move. Over 70% time it breaks 50 pips, and the average is 70 pips. So just using those tips and tricks like I taught you on today's pound report, apply the same thing on Friday. But another trade potential opportunity on Friday is due to the Nadex Euro Pound binaries that are now available. So you may not have had access to those in the past, but Nadex has added them here in the last couple months. And so now you can actually start trading them. And a lot of times, Euro Pound is just not the most volatile of all the instruments. And so it could actually set up for you to be a really good, it's so rarely traded, I don't even have it built into my default list. I need to add that in. Let's see here if this will work. If I just type that. There we go. Okay. So, so we got the Euro Pound here. And we can see, one deviation move high to low is like 36 ticks. Okay. So, our deviations were still great. It still moved down. It still hit that deviation mark. And, from the high to low, it actually passed it if you go back and look at, the last night's high where it spiked up a little bit and came back down. But, it's only, like, the whole deviation is only 36 pips. So, if you can find a good butterfly, potentially over on the Nadex exchange, then you could check it out. So, let's look at it and see if we can find a potential butterfly, and to sort of look at how does a butterfly look, how does a butterfly work, okay? And so what I'm doing now is I'm logging in here to the binary scanner, and let me bring this up over here. Stop popping up like that. And so we go in, and on the binary scanner, I would go from spread to binary, because Iron Butterfly is going to be binary. And then I'm going to choose the Euro Pound. I'm going to deselect the other instruments here. And I'll just reset all my filters so what all pops up. Okay? Now, again, there is not a lot of volatility in the Euro Pound, so it may be difficult. So I don't want to give you the impression that this is going to be an easy trade to hop in on. You may literally have to get in a decent amount ahead of time. Just literally looking at 2 o'clock, there's nothing. Okay? So, again, we're going to get rid of all of our filters and just try to see what potentially might be a trade for us and I'm just not seeing a whole lot on it. Let's click on the in the money, see if we see anything. And on the in the monies, you're basically looking at, almost going out to Friday for one. So really, really narrow range, narrow instrument. But make sure you hop in there and check out all the different possibilities, because right before news, that thing can spike up. So, like I said, this is a newer trade. I haven't done a whole lot on the euro pound, just because by nature it's not as volatile, but that can be an advantage for you if you're going in and you're looking to find some potential trades. I'm just trying to see if we can find anything that might set up for us right here, because there has to be something, right? And I guess there doesn't have to be, but I would expect there to be something. And now again, right now we don't expect any volatility. Okay, so therefore we wouldn't expect at this moment for to be it. But on Friday, before that pound release comes out, obviously that's going to add some volatility, implied volatility, into that market, and we should be able to see anything that might possibly come up. Here we go. And got euro pound. Yeah, there's really just not a lot on here right now. So I'm even logging into the platform directly to see. Sometimes I'm like, is that real? And yeah. But again, check it in the morning. Check it right before the news announcement. See what comes up. And because you might be surprised what is available. Okay? And if you find a good butterfly, the range is small. The average move on this right here, we're looking at about 20 pips. So, and the whole deviation is 36. So, so the average range is even, almost like 0.7 deviations. And so look at that trade. See if you can find that. That might be a really cool setup. I'm going to be watching for it as well. Now, this is one I'm probably not going to try to hop in like just 5 minutes before. Okay? Obviously, I'm probably going to want some time on this trade just to make it work in my favor. And, let me show you here over on the Nadex platform itself. Just directly inside of it, okay? If I'm looking at 2 o'clock, or 3 o'clock, 3 o'clock, it might, that'd be a butterfly. It'd be like $12.50 and $32, but it's only 10 ticks wide. So it's pretty narrow. 7 a.m. Now we're starting to get a little bit of distance. So 7 a.m. could work. You start going 3 p.m., it's really going to start getting a lot wider, but then but the problem is your strikes are now 20 ticks wide. Okay? So notice like 7 a.m. So we also got 26 wide, but we just got more, I guess we just got more volume on them. And so that makes me want to look at a few things and see if we can find anything here. Okay, there it goes. It just took a second to populate back on there. There we go. Okay, 7 a.m. So 11 a.m. has quite a bit. 3 p.m. looks like it's sort of lacking there. We got 20 pips on that. That's going to be the daily. So if I'll just open this contract for fun here. And I'm going to tear that one off. And then I'm going to look over here, the 11 a.m.s. So that one's like a 83.20. So yeah, there's some cool possible plays that you could actually pull off. But obviously that's an early in the morning one. It'd be nice if we had that trade like right in the middle of the show. But there are some definite possibilities you could check out right there. So I would highly recommend looking at those and seeing if you see anything that looks like it might make sense to you as well. And then we even got, right there you got 950, 86.50, and you can look back at 3 p.m. and go, okay, what about the ones above and below? 3 o'clock, $3 and $96. Okay, here's a possible strategy for you. Is what you could do. You could actually have a strangle on a 3 and 96, and you could actually go over a little bit later, the 7 o'clocks, and you could maybe collect some premium potentially on the trade to hedge that risk off, and if it gets there, you can close it down. That one's 16 and 80. So, or what would that be? 87, or basically about $20, about $20 on that trade. So there's different ways to hedge your premium, make money, play with different strikes. and look at it, but it's not as heavily traded. I mean, it's only like 50 contracts on, instant liquidity. Doesn't mean you can't do more, but instant liquidity is, pretty much limited right now to about 50. So check it out. Look at it before the announcement. See if that implied volatility gets pretty wide. It doesn't have to get really wide. Okay? I mean, again, your average range, high to low, is 29 pips. If you can get 2, ideally 3 strikes wide for a butterfly, you got yourself a great potential butterfly. Demo trade it, of course, and just play with that one. See how it works out. Now, one of the things I wanted to do today that we talked about yesterday we went into a little bit more detail on the spreads, and I don't know if I'm going to get through this whole thing today. If I don't, then we'll just keep going, but we'll just continue it tomorrow. But what I wanted to do was talk to you a little bit about how you go in and determine whether or not a spread, a binary, is actually a good binary to trade. So what are the steps in determining if that's going to be, basically within your range, within your take profit? So, and if you've ever heard my show, I usually prefer the straddles when doing trades on Nadex, even though they may have to move more, for the simple fact that how they work out a little bit better in the long run due to being able to obtain break-even easier. So what I want to do is we'll do a pound dollar. We'll look at the pound dollar, okay? So let's get rid of where it says Aussie on there. And then we'll go over, and I have the spread scanner up, okay? So we're looking over here at the spread scanner. And I got the pound dollar selected. And what I'm finding is, make sure I got a right check mark there. Okay, so what I'm finding is that if I want to do a straddle, I'm going to fill all this stuff in onto the straddle. We're going to compare the strangle if we can get it done before the show's up. Let's see here. Is that, okay, that's 2 in the money there. What about this one? Right here. What about this one? Now let's go through and okay, there we go. So 64.50, and we find a 64.50, 3 o'clock. All right, so there's a straddle. Okay? So we got, in this case, we have a little over an hour. We got about, $20 risk on the trade. So I'm going to go over here. Now, obviously, when there's news, we'll probably expect it to be, higher than that. But let's just go ahead and look at it. And then one of the pieces is I want to look at what is the underlying currently trading at with the straddle floor. So right now, the middle of that spread is 1.6450. So when I say 1.6450, what am I talking about? I'm talking about that middle price where they both come together. That's the floor of the one I'm buying. That's the ceiling of the one I'm selling. Okay, that's what makes it a straddle. So those matching floors and ceilings. And then I'm going to look at, okay, well, this one, if I bought it, it'd be 1.6453. One, if I sold it, it'd be 1.6439. And the indicative is currently at 1.6441. Okay? So being the pound dollar itself. And then, let's see here. So my long side would have a risk of the price I'm buying at minus the floor. My short side would have a risk of the price I'm selling at. Actually, the floor minus the price I'm selling at. There we go. So we have about a $14 risk on the trade. And if our average expected range right here was 70 pips, make that a little bit more visible for you. There you go. Then our take profit, we need to make 14 pips plus the risk on the other side. And to make 17 pips on the short side to cover the long side's loss and make my original $14 risk. I need to make 25 pips on the long side to cover the risk on the short side's loss, the $11 plus my original $14 risk. So what I got to do is I got to set a take profit on my long side to sell back 25 pips higher than I bought the spread. Okay, remember I bought it at 64.53, so we got to sell it 25 higher. I got to set a order to buy back the sold spread 64.39, 17 pips lower, so 64.22. Are those prices within the high to low range? Yes, they are. Okay, cool. So that's a great straddle. Now, would I do that right now? No, I don't really expect a lot of movement. But talking about like analyzing it before news. Okay. Then what I want to do is I want to take this same concept and go, well, can I get, so this is what we're going to do now. We're going to go, well, this would be my take profit prices, 64.78 and 64.22. Okay? To make this easy in comparing them, and there's a lot of ways to compare them, but what I'm going to do now is I'm going to go back over to the scanner, but I'm going to look at the binary scanner. And on the binary scanner, what I'm going to do is now I'm going to see, well, what strikes are available for 3 o'clock expiration that are basically at those take profit prices, because that's where I'm saying that the spread is going to have to get to be a 1-to-1. So I'll go over here. We're going to choose pound dollar. And then I'll just click on the out of the money because I know that's what I'm doing. I'll also click on the dailies and intradays at this time because I know that's all I'm looking for. And I want the 3 o'clocks. So let's see, we got, 11 minutes till 2, so I can go ahead and just bring this up to 15. That'll drop the 2 o'clocks off. Now all I'm seeing are the 3 o'clock expirations. Now if I want to get rid of the 7 o'clocks, I can even go in and bring this thing even further down. And now all I'm seeing are the 3 o'clocks. And I go, okay, so I got that down. All I got on here are the ones I want to see, which are the 3 o'clocks. What is the price I want to buy at? 64.78. So long side, 64.78. Short side, 64.22. Okay, so we come back. We're going to determine if is it better to do a binary strangle or a spread straddle. There. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Okay, so what we're comparing the spread to the binary. And to me, this is obvious. If you're going to do the binary strangle, I think you should first look at the spread straddle just to make sure it's better, and weigh the cost. So there's a couple ways to look at this. One of these is looking at where would be my take profit price. We got 64.78. Okay, well, that would cost me $4. And we got 64.22. There's a 20 and there's a 28. So if I do 20, then I've now moved it further out. Remember, the whole point of the binary strangle is to do it closer. If I can't do it closer, then I'm losing that benefit. Okay? Like, otherwise, why would I want to do a binary strangle when it's basically an all or nothing if it doesn't hit my strike? When I could do a straddle and actually, be break even if it doesn't hit the strike. Okay? So, it could literally just move up half the distance or whatever, and I could still be break even on the trade potentially, depending upon where everything lies. So, versus the binaries, I lose basically everything if I don't get out. Well, my total risk, if I got $10 on the short side and $4 on the long side, even with it being a little bit closer, is equal in risk. And we're talking about 6 ticks closer. Now, I could go further out, and I could make it $8, which would pretty much almost cut the risk in half. But now, again, it has to go further. That's beating the point. The point of the binaries is that they're supposed to be cheaper, therefore closer. So, I'm not really getting a big edge here. I could increase my risk and get closer if I wanted to. I could bring that other one down to $6 and make it a $16 risk trade. That'd be a possibility. And, in some ways that would be better, but it'd still be a couple dollars risk. And again, if it doesn't hit it, either side, both sides end up losing on the trade. So when I look at this right here, right now, what I see is if I was going to do a straddle at this moment on pound dollar, I would definitely choose the straddle over the strangle. And many times that's the case. Every once in a while, I'll see the binary just so cheap comparatively. Or, here's the other issue. Sometimes there's just not a good straddle. Like the market's not right at a floor ceiling. So you're really just in the money. There's just not one available. But since there's all these binaries that are, every 5, 10, 20 ticks, depending upon the expiration and the instrument, there may be a better choice on the binaries at times just due to a spread not being available, or maybe just the way the pricing works out. There's a better, possibility over there getting on the binaries. So, depending upon how long it is till expiration, what instrument you're choosing, what news instrument it is, first find your straddle and then see what would it cost me on a strangle to get at least the same or closer, again, ideally closer, for the same or less, again, ideally less risk on a binary strangle. And if I can get closer, and if it is, and or if it is cheaper, especially if both of them, then that may be a consideration. I just always have to remember, if it doesn't hit it, and I don't take profit soon enough, I'm not going to get it. Now, there's one more piece to consider that we got to look at. And that's on a quick news release, we're expecting a fast move. Now, maybe it's 20 pips, maybe it's 30 pips, maybe it's 80 pips, okay? We're expecting a fast move. So the one thing I want you to consider is we basically are saying the market's going to have to move a certain distance in order to be profitable. Okay? So this is ticks that I need in profit, but this is actually where the market has to move to. So let's look at this. If I went in, if I did that right there, 64.22. Okay, so what we're going to do is we're going to say, where is the market? 'Cause this is the one last factor. This is probably didn't know if we'd get to, so we'll try. Right there to where the market's at, I'm basically expecting a 19 pip move. Okay? So now what I'm going to do is I'm also going to go, okay, what about the long side, my take profit? So here, I got a 37 tick move. What if I just went up here, and in my simulator, I put, we'll just say 15 ticks. Could I still get a 1-to-1 on those trades? So that's what we're going to go over tomorrow, is not just looking at the binary and the price to determine if it's better, but could I hit my 1-to-1 faster on a binary?
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.